What if your customers are trying to find your business online, but instead of finding you, they find your competitors? Now, more than ever, it's time to make sure you have the right SEO to make your business stand out online. Welcome to Go Mind Your Business with Terry Bork, presented by Extreme Marketing Concepts, putting your business in front of the hungry herd of buyers who are looking for you right now. Extreme Marketing Concepts, helping you drive more traffic, dominate the market, and crush your competition. And now, here's Terry.
Hello, everybody, and welcome to another edition of Go Mind Your Business on All Your Business Radio. My name is Terry Bork, and today my very special guest is CJ Burnett of West Shore Financial Group. Welcome, CJ.
Thank you.
It's so great to have you here today.
Yeah, I'm excited to be on your show.
Great. Well, it is the Tuesday after Thanksgiving. How was your Thanksgiving?
It was awesome, very lazy.
Okay, great.
Full of food.
Full of food. Got nice and chubby and ate lots?
Yes. I think we're still eating some of the food.
Are you? Sweet. Yeah. Oh, awesome. Well, I'm glad that you wobbled and you gobbled until you wobbled, and now you've recovered and you're all set to talk to us today about insurance topics and how to protect your family and all sorts of financial information.
Yeah, I've been with West Shore for about a year and a half now, and I've been in this industry for a little bit longer. And I came out of college with a finance degree.
Awesome.
And I was the second class to go through the Student Managed Investment Fund at USF, which is a part of the endowment fund that students get to manage. And I did that for about a year.
Oh, very cool. Well, I can't wait to learn so many things today about you and your company and how you can help me be better financially. I do want to thank our sponsors today, Extreme Marketing Concepts, for help put your business in front of the hungry herd of buyers who are looking for you right now. So they're definitely somebody that you want to get in touch with at 813-863-1452 if you're looking to drive more traffic to your business, especially during these holiday hours. So CJ, I want to welcome you again. CJ is a fourth-generation Floridian, and he delivers direction and confidence to young professionals all across America. CJ offers new ideas on how to reach financial goals and establish strong foundations using philosophies that challenge and transcend today's financial thinking and beliefs. And his clients consist of technology firms, lawyers, people in the medical field, researchers, engineers, young professionals, and young families. And he helps these folks with life insurance, health insurance, disability insurance, long-term care insurance, and he's earned his Series 7 and Series 66 insurance designations. Those are hard. Congratulations there. Yeah. And CJ has a Bachelor of Arts degree in finance from University of South Florida right here in Tampa. And during that time, you concentrated in asset valuation and security analysis. And that's giving you a unique view on investments and income strategies. And then on a personal note, I know that you live in Odessa, Florida. You have a beautiful wife. You've been married, about 5 years?
Yeah.
And you have a gorgeous little girl. What's her name?
Meadow.
Meadow. And she's just awesome. She's beautiful. And I know that you love playing and teaching all types of music from bluegrass to jazz and classical. And that you're part of a small church in Carrollwood and you serve on the worship team. And you're a violin player and a bass player. And you volunteer in the church and in the children's ministry. And you're on the financial stewardship team. Wow, you're a busy guy.
Yeah. This church is pretty close to me. I'm pretty involved because whenever I was 16 years old, I played in a couple groups while I was a fiddle player. And one of the main bands that I played with, one of the lead singer in that band actually ended up, he's actually leading worship at this church.
Oh, that's terrific.
So it's really cool to continue to play with him every Sunday, since we have such a long history.
Oh, absolutely. And I know that we were talking before our program today. I'm an old or rusty, maybe that's it, a rusty violin player, and I remember how relaxing it felt that just to take out the fiddle and just, play and then just enjoy the music and just, whatever emotion you were having, you can just feel it and live it and enjoy the music.
Yeah, getting lost is my favorite part. Getting lost in the music, because then no thinking. I can just relax and just let whatever come to my fingers play. So
awesome. If you're just joining us, we are speaking with CJ Burnett. He is from West Shore Financial Group, which is at 5426 Bay Center Drive in Tampa, Florida. The zip over there is 33609. If you have any insurance questions for CJ, you can reach him directly by calling 813-289-3632, or you can visit his website at www.cjburnett.com. So CJ, again, tell us a little bit more about yourself. I kind of touched on a little bit.
Well, so I've with West Shore, because West Shore Financial is a pretty established company. We are a general agency of the Guardian Life Insurance Company of America, which is some 150-year-old company, and the part of the investment side, because I do insurance and investments, but I also do a whole lot of other things along with that, just helping people guide them along the lines of their finances. But the one thing that I really enjoy about my job is the freedom that I have with a bunch, the investment side of it. I can go with a lot of different institutions. I have I have a managed money platform that we use. And that's one thing that I really liked about West Shore that kind of stood out to me as a company, was the freedom that I could get and the options that my clients had whenever they came to see me.
Okay. And they call you a financial strategist. Is that correct?
Yeah. So financial strategist, financial specialist, financial advisor is, typically thought of like I do have that title. There's a lot of different titles that they give us, but there's an investment advisor representative is one of them that's the kind of like the textbook thing. So, but I do I like to, whenever I first sit down with somebody and talk to them about finances, usually insurance and investments are not part of the initial discussion.
Got it. Okay, great. So I know that you enjoy helping people protect their family. Tell us a little bit about your approach when you're helping clients make financial decisions.
Well, so, I see every financial decision as something that's going to impact not only their entire financial life today, but something that's going to impact it forever. And most of the time, people have what I call junk drawer syndrome. So do you have a junk drawer in the kitchen?
Absolutely.
So, the stuff is kind of thrown in there and nothing's really organized. I kind of maybe know what's in there. Sometimes I go to find something, I can't find it. So our finances are, a lot of people will struggle with that initial problem where things are all over the place. There's no real organization to it. And that's one of the first things that we look at is organizing them so that we can see how one decision has that ripple effect on the rest of their finances.
Okay, got that.
And then, I also look at financial decisions almost like taking medication.
Okay. Explain that to me. What does that mean?
So whenever I go to the doctor and my knee is hurting or I'm having a problem, usually the problem isn't the problem may not be my knee.
Okay.
The problem may be something else that kind of underlies it.
Okay,
right?
got it.
So there's a more serious illness behind that pain.
Okay.
And so, I look at a financial decision as, one particular solution may not be for everyone.
Okay.
Because everyone has a different type of illness. Now, whereas there may be, maybe one medication works for a few different people, it's not going to work for everybody because maybe someone's allergic to it. So, it's a little bit more involved than what I think most people really believe it to be.
Right.
Making a decision based on my 401k, only looking at my 401k can hurt me in the long run if I'm not also looking at a lot of the other things that affect my overall financial picture.
Okay, I got it. So, and I get that because, we don't like to live in a cookie cutter house. We don't want a cookie cutter insurance approach. All our situations are different. Our needs are all different. That makes a lot of sense. Thank you for clarifying that. Okay. Now, thinking about all the stuff that you're sharing, it looks like this is a tremendous amount of work. Where do you start with something that seems so encompassing?
Well, so, we can break down a person's finances into four main domains.
Mm-hmm.
There's protection, assets, liabilities, and cash flow. So, there is a particular order that we go in whenever we're first meeting with somebody. And, it doesn't make any sense for me to talk to somebody about their investments when they may have a gaping hole in their protection domain. So
Okay.
let me kind of elaborate.
Please.
I never want to put myself in a position where a client calls me up and, it's the wife of, let's say, a client, and she says, CJ, I don't know what we're going to do. Rob just had a stroke. He's going to be out of work for 6 months, 12 months.
Mm-hmm.
What do we do? Well, I never want to put myself in the position where I said, well, I'm sorry we never addressed that, but your mutual fund got 8% last quarter.
Mm-hmm.
Right? So there's a particular order in which things should be in, and we typically start with protection.
Okay.
Protection is the only one of the four domains where once something happens, I can't go back and change it.
Okay.
So, for instance, if I'm leaving out from after this show,
Mhm.
and I am texting,
Mhm.
and I hit somebody,
Okay.
and let's say
Happens all the time.
happens all the time,
Uh-huh.
right? Especially in Florida,
Right.
At least it seems like, because
Right.
there's a lawyer on every corner
Sure.
just waiting for auto accidents. But
Right.
let's say I turn the corner, I didn't see somebody, I hit them and I killed them,
Mm-hmm.
and let's say I was texting.
Okay.
Now that person had a family, had a spouse,
Mhm.
and had kids.
Right.
So do you think that I'm going to get sued?
Probably.
Right.
In
So
Florida?
in Florida,
yeah,
most
probably.
definitely, right?
Yep.
They're gonna come in. How much do you think I'm gonna get sued for?
Oh, well, I venture to say they'll probably start at $1 million, probably higher.
Right, exactly, because it's the actual loss
Right.
to that person's family. I just stopped the income to a family
Mhm.
by hitting that person and killing them. So they come after me for $1 million, and let's say on my auto insurance, most people don't really know what their liability limits are,
Mhm.
and they don't really know what it's for.
Right.
But let's say I had $25,000 of protection for my on my liability side.
Right.
Well, that company's going to pay out $25,000, and then I'm on the hook for the rest.
Got it.
So now I have to hire a lawyer, and it becomes a whole much more of a pain in the neck.
Absolutely. I
And-
can see that.
And at the max, I can get $250,000, in some cases $300,000 on auto insurance, and to cover that. But if they're
Mhm.
still coming at me for $1 million,
Mhm.
$2 million, well, then I've got a real problem, and there are other ways to protect against that.
Mhm. Okay. Well, what if, the amount that you can get, that 250,000 just isn't enough? What happens?
So the 250,000 that gets paid out, let's say there was a death, there are lawyers out there that will say that the $250,000 is enough. The company will pay that.
Mhm.
They're gonna issue that check, and then majority of the time people are not going to continue to come after you.
Got it.
In some cases, I believe it does happen, but for a 35-year-old who, let's say, makes $50,000, if that 35-year-old prematurely passes away,
Mhm.
his family could lose anywhere from $2 to $2.3 million.
Wow. Okay.
So, I mean, to the family, you're talking about a loss of income, medical bills, maybe, if he was rushed to the hospital, or, there can be a lot of other things that cause, but the loss of income is the most expensive part of that tragedy.
Okay.
And so, that's where a lot of things like life insurance can come into play, where, a lot of people think that they're completely, fully protected on their life insurance. And, and sometimes that isn't the case.
Okay. Great. If you're just joining us, my name is Terry Bork with Extreme Marketing Concepts. We help put your business in front of the hungry herd of buyers who are looking for you right now. I am speaking today with CJ Burnett of West Shore Financial Group. He is a financial strategist. If you have questions about your insurance or protecting your family, you can reach out to CJ by calling 813-289-3632 or visit his website at www.cjburnett, BURNETT, cjburnett.com. You are listening to Terry Bork on All Your Business Radio. CJ, I just want to go back now. We're talking about insurance. Exactly what type of insurance is this that somebody needs? It's not auto insurance, then.
Well, I'm actually talking just a couple ways. So,
Okay.
so in the previous example, the person's loss to their family may be 2.3 million. Well, life insurance can help fill that gap, and it can be very inexpensive. but I'm also talking about the person that. What about me?
Right.
What about the person that hit that man that
Mm-hmm.
caused that $2.3 million loss to that other family?
Okay.
Because if I switch that story,
Uh-huh.
and I just look at what would happen to, how to protect myself from that liability. Well, umbrellas are good.
Right. I've heard of those.
I can get $1 million umbrella for $350 a year.
Mm-hmm.
And these aren't exact quotes, but
Sure.
these are just roundabouts, depending on where you are. And sometimes there's even an underinsured motorist part to our auto insurance.
Mm-hmm.
And let's say I got hit and injured or
Mm-hmm.
killed. Well, my uninsured motorist part of my auto insurance policy covers me if that person doesn't have any insurance at all,
Okay.
or if they're underinsured, which is important in Florida because there are a
Right.
lot of people that are underinsured or uninsured.
I got that. Okay. Okay. So, and then the same thing would happen if you became sick or disabled or anything. How do I protect my family from income loss there?
The one thing that I think is commonly overlooked is disability insurance, and I hate
Uh-huh.
disability insurance is kind of hard to really pin down. But if I became sick or injured and I can't work, there is a way that people can set it up so that they can still get a paycheck. It's not going to be 100% of their paycheck. It may be 50%,
Mm-hmm.
60%. But at least I had a friend of mine who actually became disabled last December,
Mm-hmm.
and I went over to her house and I asked her a question. I said, "Hey, how does it? I mean, how does it feel being disabled?"
Sure.
And she said, "Well, it's like dying, except I watch everything fall apart."
Oh my goodness.
So this can be a huge area of need for a lot of people out there, and who they earn an income. They may be the primary breadwinners of their family, and if they're become sick or injured, unable to work, well, that income is now gone, and bills stack up, and life becomes a whole lot harder.
Mm-hmm.
Whereas that kind of insurance, kind of having paycheck insurance in order to fill that gap is pretty. Now there is one thing that I want to mention.
Okay.
A lot of the people that are listening probably have disability insurance through their company or have it available to them.
Right.
And, that's the first place that I go because it's usually pretty inexpensive.
Right.
Just to
Just a
figure
couple
out,
bucks.
yeah, I mean, it can be real cheap. And, there are some drawbacks to it.
Mm-hmm.
One, it may be 50% of their income.
Mhm.
Two, it may also be taxable. Whereas an individual policy, in contrast, is going to, depending on how it's structured, going to pay them longer than the stuff that they get through their work.
Mhm.
So, there are a large percentage of the disabilities that happen, the sickness and injuries that happen are, not going to go away in the first year or
Got it.
two.
Right.
If every time I got sick or injured and it was just no big deal, and 6 months later I was back to work, it really wouldn't matter too much as long as I had enough in savings to cover that gap. But a lot of times it continues beyond that year or two mark, and if they don't have the right insurance, even if they don't have something that's an individual policy that's not
Mm.
through their work,
Got it.
it's only going to cover them for a particular amount of time, and then that's it.
Yeah. Oh, I mean, that makes a lot of sense to me. I want to go back a little bit, if we can, to the life insurance conversation. I want to try to understand, how do we determine how much life insurance I need
Well,
or should have?
there are two schools of thought here.
Okay.
One is the needs based,
Okay.
and that's what typically the industry follows. It's well, I want to cover the mortgage if I should pass away. So
Okay.
whether it be 250,000, 500,000, and just enough that my family can have money if I should pass away. And then there's another school of thought, which is the one that I ascribe to, and that is, if I should pass away,
Mm-hmm.
what is the actual loss to my family?
Okay.
Well, if I'm 35, I make $50,000, and I pass away at 35, the
Uh-huh.
actual loss to my family is $2.3 million. And
Mm.
what life insurance companies will do is there is a maximum amount of life insurance that a person can get.
Oh, really? I didn't know that.
Yes, yeah, there's a maximum to it, and that maximum is their human life value.
Okay.
It is that number
heard of
that
that. Okay.
yeah, it's that number that they would that would be completely replacing them economically. Now, my clients, I can't replace the mentor, the father, the husband, but I can make sure that things are in place so that, if something should happen, their family's going to have the proper protection in order to replace them economically. And so the mortgage is not just going to get paid, but they're going to be able to have the same income because Terry, I, me having a 5-year-old daughter,
Mhm.
she'll be 5 in January. There's something that kind of in my personal life that I adopt, and that is if I should pass away, I want her to go to the college that she would have gone to if I had lived.
Got it. Okay, that's a great philosophy.
So that's really and with things like term insurance that are inexpensive, for a policy for like say a 25-year-old male,
Mhm.
they could get $1 million policy for let's say $40, $45 a month.
Mhm.
It's very inexpensive. It fills that need, and you feel completely secure.
I got it.
And that $1 million, might spit off some money if you put it in investments or whatever. That might spit off a little extra income for the family, and so the kids can go to the college that they were going to go to. The wife doesn't have to remarry, or it makes life go smoothly. And I work every day
Mhm.
so that my family's lifestyle gets better.
Oh, absolutely.
I don't
Okay.
I don't work just to cover the mortgage.
Right. Okay. You're talking about these terms, life insurance term. I know there's whole life. I know there's lots of different varieties. Can you explain some of that to us so that we can understand a little bit better, and then maybe which ones we should really look at for purchase decisions?
Absolutely, yeah. There are a lot of times you hear that there are 2 types, but there's actually 3 types.
Okay.
One is term. The second one, I always think of Universal Studios, obviously, because I'm here in Florida. Universal or variable
Heard of
universal.
that one.
And then there is a third type, and that's whole life. And a lot of times, whole life is there's a big misunderstanding about what it is and what it does. And there's a big misunderstanding about mutual insurance companies. But to just keep it pretty brief, there are a few questions whenever I see somebody, term is a point A to point B. I have coverage for this amount of time. If I don't need life insurance after I retire, then that's typically what I'm going to go with.
Okay.
If I want something that's more permanent, maybe something that would cover burial costs, then I might go with a traditional whole life policy of $25,000 or a small amount, in order to help. So one day if I do pass away, then the money will be there. And the neat part about whole life is I may only have to pay it for 6, maybe 14 years, and then I
Right.
never have to pay for it again,
Got it.
which is nice to kind of get out of the way
Absolutely.
to
Yeah.
cover burial expenses in the future. But questions that people want to be asking themselves whenever they're looking for what type. But well, the first question is how much.
Mhm.
Kind of the things we were just talking about. Am I getting enough to cover the mortgage, or am I getting enough to replace me
Right.
as an asset to the family?
Sure.
And but the second question is, as far as what type is, am I going to need it in retirement?
Mhm.
There are a lot of reasons why someone would need it beyond retirement
Okay.
until they should pass away, whether it be
Sure.
to cover taxes that might incur for their estate.
Mhm.
And none of us really know what taxes are going to do in 20 years,
Mhm.
so
Nope.
it's very hard to plan for that, right?
Absolutely.
But is the person saving money consistently?
Uh-huh.
A term is enough to fill a need immediately. You
Mhm.
can get it in place, and you can get a 20-year term pretty cheaply.
Okay.
And then the other part of it is, do you like having risk in your life insurance? Because there are a lot of people that will want to put the investment part of it. The universal or variable universal typically has an investment separate account where it's kind of tied to a stock market index.
Right.
And so it runs the risk of maybe lapsing
Mhm.
early because
Right.
the stock market doesn't perform well,
Ooh.
and the cost to insure me ends up eating all of that cash value.
Okay.
But with traditional whole life, you don't have those kind of problems because it's not correlated with the stock market,
Okay.
and it grows very moderately. It's usually more of a conservative investment.
I got that. Okay, great. I know that lots of employers offer their employees life insurance through work, and it's usually double or triple, or I know some even let you go 4 times your salary. Is that not so basically what I'm hearing you say is that's not necessarily the best judge of how much life insurance you truly need.
The nice thing about since it's so inexpensive,
Uh-huh.
I would say yes, absolutely. A lot of the time, it's a yes, it's a no brainer. Do
Mhm.
it.
Okay.
It's usually not enough. Like you
Okay.
said, I think
So you can supplement.
2 times. Yeah, exactly. You can supplement. You have an individual policy because let's say I don't know how many people are still at their employer, the same employer that they were 10 years ago.
Right.
But if you move, then
Mhm.
that policy goes away.
Right.
It doesn't go with you
Okay.
the majority of the time. And
Right.
so, an individual policy, you pay, let's say you pay $5 for the group and $20 for the individual. Well,
Mhm.
the individual is going to stay around no matter what. It
Right.
might be a little bit more expensive, but it's kind of, I think it's a
Sure.
no-brainer on whenever I think about it.
Right. Oh, absolutely. And I know that as I get a little older, things don't work as they used to when I was a lot younger. So getting a individual policy could be more challenging or more expensive as I get a little bit older.
Yeah. It every year the cost to insure a person does go up, and so there are a lot of people out there that are listening right now that actually won't be able to get it.
Oh, wow. Okay. So
The
there's those limitations.
There are definitely limitations, and they'll go to apply for it, and they'll have a heart issue that they were born with,
Uh-huh.
and it's never really been an issue. I had a 53-year-old client who we applied for it. He had a heart condition. I can't remember exactly what it was at this point, but
Mhm.
he had a heart condition when he was born with. It's
Right.
never been an issue, and they declined him.
Oh, wow. So
They just said no. They said
okay.
we're not even going to insure you, and then that actually goes on his record. So if he goes
Oh,
to
wow.
another insurance
Okay.
company,
Mhm.
they all have a network that they all share,
Mhm.
and so whenever an insurance company denies a person coverage, that mark is on that record, and all the other insurance companies can see it.
Wow. Okay. So that's something to be aware of. So you want to be a good risk, I guess is a good word.
Yes, yeah, and don't lie on the application.
Oh, no, never. Okay. Let's shift a little bit over to savings when we come back from our break. My name is Terry Bork, and you are listening to Go Mind Your Business on All Your Business Radio. And we're just going to have a word from our sponsor and pay our bills. So we'll be right back. And welcome back to Go Mind Your Business. My name is Terry Bork, and this is All of Your Business Radio. Our show today is brought to you by Extreme Marketing Concepts, helping put the hungry herd of buyers in front of your business right now. If you're looking to get more marketing exposure for your business, give them a call, 813-863-1452. Today, my very special guest is CJ Burnett of the West Shore Financial Group. He is a financial strategist. If you have questions about your portfolio, don't know what to do, or looking to have a review, CJ will be happy to help you with that. You can reach him at 813-289-3632 or visit his website at www.cjburnett.com. So welcome back, CJ.
Thank you. Yeah.
Okay, so I want to go back and talk a little bit about savings. And I know that you review folks' protection portfolios. What happens after that gets done?
Well, then we move on to cash flow. So much like the four domains that I was talking about earlier: protection, assets, liabilities, and then cash flow.
Got it.
Cash flow is the second thing that we look at, because this is where all the action happens. And a lot of people might be thinking in their minds budget,
Right.
and they're absolutely right. But what I like to do is I like to call it a spending plan.
Okay.
So a lot of times people will spend their money in a certain way where they get paid. They might pay off debt because they don't really like having it around, although it somehow seems to keep coming into their lives. And every time they get it paid off, it just seems to come back. Then they might save, and then they use whatever's left to protect themselves.
Okay.
So, which is another reason why a lot of people don't have their legal documents, and they don't even know what legal documents they should need.
Okay.
But we like to show people how to spend their life in a way where they protect today first,
Okay.
so that they never move backwards. Because one of the biggest threats to a person's ability to save, ability to pay off debt, and ability to live are those things that we've already talked about, whether premature death, sickness or injury, unexpected things that we can't really foresee.
Got it.
And we help people protect themselves so that they continue to move forward. Then we help them save.
Okay.
Then we help them strategically pay off debt, because mortgages are different than credit cards, are different than student debt, and they should be treated as such. And then we tell them to go spend the rest on their lifestyle, and we give them tools, a couple different tools in order to help them do that in an effective way so that it doesn't require a whole lot of time. And a lot of times people will talk about, well, how much money should I be saving? Or,
right. I was just going to ask you that, how much is enough? What's the amount I can play with, and what's the amount that needs to go in the bank?
So the easiest, the easiest way to measure it is to go by a percentage of gross income that is before taxes.
Okay.
So if, whereas it might not be a good measure for a lot of the people listening, because they might not be able to get in a position where they can get to, a 10, 20% of their income.
Mm-hmm.
That 20% seems to be majority of the time sufficient enough to cover for future needs and for retirement.
Okay.
So, and not just the immediate uh-ohs that we all experience, but also for education and lifestyle needs, the better car, the bigger house.
Right.
Most people come to my office with a current savings level between 3 and 10%.
Mm-hmm.
Few come with 15% or more.
Okay.
The majority of my clients will be able to save at least 20%, or know what they need to do in order to get to that 20%. And a lot of times we try our best to avoid changing lifestyle so much,
right?
But we try to give every dollar a name.
Okay.
So, once the money comes in, we need to be tracking it as to where it goes.
Okay.
And as long as I'm tracking it, I know where my money's going. I don't overspend at Starbucks by accident,
right?
Without really knowing. I've heard it time and time again. CJ, I'm making all this money. I don't know where it goes, and it seems to just disappear.
Right.
And what they're really telling me is I'm not tracking it, and I don't have the tools to do it in a time efficient manner. And that's typically what we help people with.
Okay. Got that. So should I save or pay off my debts? Let's talk about that for a minute.
So that's one of the biggest questions that I get is, let's say I make $50,000 and half of my income's going to my debt because I got student debt, credit card debt, and mortgage to pay.
Sure.
It sometimes feels a bit overwhelming, and people start throwing all their cash at their debt.
Right.
Well, what that does is, whenever a surprise does happen, maybe they need new tires or a new roof on their house.
Mm-hmm.
Well, now they're going to have to go into debt in order to pay for that surprise.
Right.
So one of the things, whenever someone asks me that, it all depends on how much that person has in debt as to how much they're going to put towards the debt.
Okay.
Because a lot of times people are trying to pay it off sooner than later, but they keep getting into it because they have no savings set aside for emergencies.
I got that.
So saving comes before paying off debt majority of the time. That doesn't mean we don't pay minimums, though.
Okay.
So, let's continue to pay minimums, and let's figure out how we can get in a habit of saving, because maybe our lifestyle costs us too much and we don't really know it. And a lot of the people that I see have said, it's kind of funny, because as soon as I started tracking it and I noticed how much was going to this and that and the other, then now they have more control over it. The avoidance behavior is gone.
Right.
And the fear and the intimidation of their finances is completely eliminated. And they're in control of where every single dollar goes, and they have no problem saving and paying off debt.
Wow, that's awesome. I know that saving money sometimes can be a challenge for me. I'm a single parent. I got a daughter in college, one that's just ready to get out of the house and go off to college. So while I tried to do good when they were smaller, they like expensive toys now. So it seems like you've got something for everybody, some sort of tool that can make all of this a possibility for them, regardless of their financial situation.
Yeah, and one of the bigger reasons why we look at the protection portfolio first
right.
is we find out if they're paying for insurances that aren't really protecting them.
Oh, really? Okay.
Because
so there are some.
There are some. A lot of people will have insurance policies that really don't do anything for them. And so what we can do is we can show them how to reallocate that money, and instead of protecting that, the illness that's protected 3 times over because they're paying for several different insurance policies, then they can take that money and reallocate it.
Okay. Okay. So how, you talked about knowing where your money was going. How do you do that?
So there are several different ways that this works, depending on the person. But
Uh-huh.
some people like the Excel file that I give them. That kind of helps them track their spending. They use receipts in order to track it. Some people say, "Well, I use Mint.com,"
Mhm.
which is good. And if you look at it more than once a week, then that's awesome.
Mhm.
However, majority of the time, people might have 2 to 3 weeks between the times that they look at it,
Mhm.
and by then the damage is kind of already done.
Right.
So it's all about staying active and having something that they're actively doing
Mhm.
in order to know and in order how to kind of make sure that they're spending their money the way that they want to.
Okay.
I know that there is a couple other ways. I don't know if have you ever heard of Dave Ramsey?
Yes, I've heard of Dave
So Dave
Ramsey.
Ramsey has a pretty cool thing called the envelope system. He didn't create it.
Right.
It's actually something that's I think I want to say it's like 100 years old because that's he actually talks about it in one of his seminars. But
Mhm.
uh, if I have envelopes in my purse, well, I don't have a purse obviously,
Right.
but if
Your man pockets
in my
there.
in my pockets, if I have envelopes and I put cash in those envelopes that are
Uh-huh.
designated for food, groceries, that kind of thing, then I'm only going to spend the cash. And there is a certain type of pain that comes whenever I have to pay cash with something rather than putting it on a card.
Uh-huh.
I feel something as I feel I can like some people do really well with this because paying for cash is painful.
Right.
Paying with cash is painful to them. And so paying with cash makes them make better decisions.
Sure. I
As
got
far
that.
as, instead of going to Moe's and, spending $30, they might only spend 20.
Uh-huh.
And they don't really feel like there's much change, and there probably isn't. But that makes a big difference because now they're spending 1/3 less at the restaurants that they're going to.
Okay. I got that. Okay. So it does, I mean, well, that could be great for your diet, right?
Yeah, yeah,
You're not eating all the junk, yeah,
yeah. It cuts out a lot of different things. But the
Mhm.
one thing that I constantly stress is it's not about trying to live off of ramen noodles.
Uh-huh.
It's just about knowing where the money's going.
Got it. Okay. Um, I noticed that it can be challenging for many people to control their spending. Is that because of with your tools? Is it going to be a different type of behavior that folks are going to be using?
Yeah, well, the avoidance behavior I think is a big issue for a lot of people because it's intimidating. Finances are intimidating. They don't
Mhm.
like numbers. We have a thing at the office we kind of play with whenever I'm in front of a couple.
Uh-huh.
I'll say, well, one of you is the person that digs in the weeds, and the
Mhm.
other one is frolicking in the tulips.
Wow.
Right?
Okay.
So one of us in every couple, one of us has a budget. We want to stick to it. We're always nagging the other person about sticking
Right.
to it. It can kind of, it causes friction in the marriage oftentimes. And then the other person is kind of doesn't really pay attention to their finances. Doesn't really. It's not that they don't care.
Mhm.
It's just that it's not the first thing on their mind.
Okay.
And so, one of the things that I really like working with people, especially in the marriage part of it, is trying to come to where a system is set in place so that everyone's comfortable with what's going on.
Right.
And that friction in the marriage, that avoidance behavior that the person might have because they don't understand it, I wanna completely eliminate that, and I want to answer questions. And I don't like answering questions with jargon.
Right.
Talk to people and help them really understand finances and what's going on,
Mhm.
because then that avoidance, it's no longer fearful. They understand it all, and they feel comfortable with it enough to
Okay.
to now become engaged and really address the issues that they're having.
I get that. We're at a very interesting time of year. It's the holiday season. Lots of folks are getting bonus checks. Lots of companies are preparing for their annual salary increases, which, most companies that I know, they happen in February and March. What's a good way for folks who get this bonus check, in the next couple days, or their annual increase in their pay, that they can protect themselves and not unconsciously overspend and continually to stay on track?
Well, the tracking part of it is going to help, but for some people, you know I would say get in the habit of expensing your savings.
Mhm.
And what I mean by that is whenever you get paid, know exactly how much money you have to carve out and put in an account that may even be with a different banking institution,
Hmm.
just so then you don't move it a month later.
Okay.
But those bonus checks, I would say, well, there might be debt that they really should pay off. Depending on the person, they I'd put it to debt, savings, or maybe they need to spend it.
Okay.
Maybe their lifestyle, maybe they are doing everything in the right order, so that they can that bonus check can go to a vacation.
Got it.
I mean,
Okay.
it really depends. But I do want to stress that the idea of you're going to consume what's in front of you,
Mm-hmm.
and if money's in the checking account, it's going to get spent.
Yep.
So get it out of the checking account, put it into a savings account that you're not going to touch, and only use it for emergencies.
Got that. Okay, great advice. We are speaking with CJ Burnett. He is a financial strategist with the West Shore Financial Group at 5426 Bay Center Drive in Tampa, Florida, 33609. If you have questions about your financial strategies that you have in place, or you know that you need to make some changes after listening to CJ, give him a call at 813-289-3632. And he's got a great comprehensive website, which will help as well at www.cjburnett.com. My name is Terry Bork. And CJ, I want to head over to some financial relationships. And what's the best way to bring up a financial matter with your spouse? Sometimes it can cause tension, and you might even get in an argument.
Well, the one thing that I've I think I've kind of experienced it myself is the easiest way to do it is to just be non-confrontational,
Mm-hmm.
and to continuously remember that there's another person that needs to be involved in financial decisions, even if they a lot of times are avoiding it. And
Okay.
it does cause tension a lot of the time. But my wife and I were constantly talking to each other about whatever decisions that we're making, and just trying to stay on the same page.
Mm-hmm.
And I think that the more that a couple gets used to doing it, maybe it be I know a lot of people who formally meet at the dinner table
Mm-hmm.
every week and just say, hey, here's what I'm struggling with. Here's whatever, we need to get this decision taken care of, or whatever. Or it might be something like my wife and I don't do that. My wife and I will just talk about it as every day.
I got it.
Every
Okay.
day financial decisions are being brought up. So I think that the more people talk about it, the easier it becomes
Sure.
to kind of talk about whatever's going on in their finances.
I got that. Okay. I want to switch over a little bit and talk about some investments. Are there some good investment options for young people?
Investment options for young people. It's the industry that I'm in pushes risk,
Uh-huh.
and what I like to show people is that let me ask you a question.
Okay.
Do you think anyone likes really leaving it up to the stock market for their retirement?
Oh, absolutely not. My dad just retired, and he got hurt very badly. Because he doesn't have any more work life left in him, so the stock market's not going to do anything for him.
Right.
So, no, I don't. I'm afraid of the stock market, and I'm kind of scared of risk. So, what options are out there?
Well, so the options that are out there's many different options,
Oh,
but I
good.
will say the one thing that I want to stress, though, is that investments, even though we're taught investments are the way, the truth, and the light in order to get to retirement, they aren't.
Mm-hmm.
And younger people need to really establish a particular understanding as far as financial priorities are concerned, and really realize that I don't have to invest in order to be successful.
Got it.
I will have investments, but I don't have to take on a whole lot of extra risk.
Okay.
Risk a lot of times doesn't it can mean do more harm than good.
Got it. Okay.
And even though I may have time to make
Mhm.
it up, I still lose money
Sure.
if things go south.
Okay.
So I show people how they can take less risk.
Right.
They can pay less in taxes.
Mhm.
They can reduce their costs in a
Okay.
way that doesn't affect their lifestyle,
Okay.
in order to help them save more money. And saving is more important than investments.
Awesome. Okay. Let's talk about, good debt for a minute. What is your feelings about debt? I know that having a mortgage, that's a huge debt, but it's something that's called a good debt.
Right. So the understanding of good debt in my industry, I see no debt as good debt.
Oh, okay.
I
I
have
thought that was a good thing to have a mortgage.
I have a very slanted point of view.
Okay.
When it comes to mortgages, well, mortgages are not horrible.
Okay.
Obviously they provide for a house,
Sure.
and 15-year rather than a 30-year. I mean that whole debate. I've heard that being brought up several times, but
Mhm.
it all comes down to just debt in general.
Sure.
As we put things on a credit card or whatever the case may be, it's still going to cost me interest.
Hmm.
And if I can figure out a way to pay for the things that I'm going to buy without
Mhm.
having to go into debt, is there any reason why a person wouldn't want to do that?
Hmm. Okay.
Because I don't see there being one. But there's a lot of typically whenever you go to get a mortgage, they'll approve you for 35%
Right.
debt to income ratio. Which, so if you make say $50,000,
Hmm.
35% of that is what is that, 17
Yep.
17,000?
Mhm.
So so 17,000, 35% of my income, that's a little over 1/3 of my income that's
Mhm.
approved to go towards a mortgage.
Right.
So that is $17,000 less that I have to put into investments or
Mhm.
put into a savings account. So, but there are a lot of different questions that come surround student debt, especially.
Yes, I wanted to bring that up too. Should you pay for the kids' kids' loans? Should they pay that off quickly?
Yeah, well, and student debt, depending on when you got it, because I have a client who has a student debt at 1.7%, and then I
Mhm.
have another client that's got it at 8 and a
Wow.
half.
Okay.
So depending on but no debt is good debt. I think credit cards need to be eliminated first.
Mhm.
Always come first, then comes student debt, and then comes the mortgage. And I think prepaying the mortgage sometimes can actually be a bad thing. Depending, again, financial decisions are all based on a global scale, on the overall picture. They can't just be looking at just my debt.
Got it. Okay. So, and when you're talking about credit cards, definitely want to revisit those ones with a really high percentage rate attached to them. Is that what I'm hearing you say? So you can negotiate that?
I don't do a lot of that.
Okay.
I actually have partners friends of mine
Mhm.
who deal with a lot with the credit issues
Mhm.
and bankruptcy issues, because sometimes people will find themselves in positions where they need to talk to an attorney,
Mhm.
a bankruptcy lawyer, or whatever the case may be. But
Okay.
but yeah, credit card debts are always first because they do typically have a 14 to 20% interest rate, and if you have, let's say you have $1,000 balance on a credit card, well, 20% of $1,000 is $200. So every, that first year in interest, you're going to spend 200. You're going to give a bank $200 for nothing,
Right.
just because you took out that
Just because
1,000,
they gave you a loan,
just
right?
because they gave you a loan. So
Got that.
if you have no problem giving free money to banks, then I think credit cards are a great instrument to put money into.
Okay. You talk about credit card debt. Is there a proper way that you teach your clients to use their credit card with
Uh,
this tool that you're sharing with them?
A lot of the times, we cut them up.
Really?
Yeah,
Okay.
we
You walk in there with a big wallet, you walk out with nothing.
I have some very massive scissors at my office.
Wow.
But
Okay.
well, just the credit card a lot of times is used as a crutch.
Yes.
An emergency happens. That's okay. I have a credit card. I can put things on a credit card.
Mhm.
But that is mainly because savings wasn't a priority over paying off debt.
I see. Okay.
And so going back to financial priority and how I protect, then I save, then
Mhm.
I pay off debt. Well,
Mhm.
now if I have savings in the bank, I don't have to rely on a credit card.
Okay.
And so, and you know what? Worst comes to worst, and I save $10,000 over the course of a year,
Mhm.
and I have a couple credit cards of $2,000, $3,000.
Right.
Well, I can just take that $5,000 from my $10,000 savings account and pay it off at the end of the year,
Got that.
rather than consistently trying to put more money on a monthly basis towards it, trying to pay it off, and consistently going back into that same hole.
Okay, great. We learned so much from you today, CJ. I'm sure that our listeners may have additional questions and might be have confusion or really want to review their portfolio at this point in time. And I think the end of the year is absolutely an amazing time to go and do that before you get started with the new year. So I know that they can actually reach out and give you a call.
Absolutely. There's a lot of things that are changing in the industry right now, with taxes and just overall.
Mhm.
And the world is constantly changing. And reviewing things brings value, because there might be old money at old jobs with 401ks. There might be a lot of things that are out there that that they may remember, they may not, and a lot of times a comprehensive review can bring all of those pieces together so that they feel more comfortable about their financial future and really securing those goals and dreams that they have.
Right. Okay. And doing a review prior to having a tragedy is probably in your very best interest.
Yes. Preventative care is always preferred over. I'm not a doctor. Like people will come to me and they'll have real issues, and it's I'll get in a position where I can't help them because the problem has already occurred.
Right.
It's all about planning is not about doing it, figuring it out later on.
Sure.
It's about doing it now so that it then doesn't become a problem later on.
Perfect. Well, if you have questions for CJ, you can reach him at the West Shore Financial Group at 5426 Bay Center Drive in Tampa, Florida, 33609. Again, his phone number is 813-289-3632. And he's got an amazing website at www.cjburnett.com. CJ, I want to thank you today for joining us. It was my pleasure to have you as our guest. My name is Terry Bork with Extreme Marketing Concepts, and you've been listening to Go Mind Your Business on All of Your Business Radio. We will see you next week. Until then, reminder to go mind your business. Take care, everybody. Bye-bye.
Thank you for listening to Go Mind Your Business with Terry Bork, presented by Extreme Marketing Concepts. If you want to drive more traffic, dominate the market, and crush your competition, find out how by visiting our website, www.extrememarketingconcepts.com. And join Terry next time for another episode of Go Mind Your Business.